What is going on, investors? Hopefully, guys are doing well out there. That is right. It is not Friday. It is actually Saturday here on the Investor Channel, where every Friday, when we're not traveling, we recap all the major news and the technical chart patterns from all the major FAANG stocks. This week, we've got a bunch of news because we are just a couple of weeks away from a lot of these companies announcing their earnings. In fact, I just went through all the dates. You have Meta, you have Apple, Amazon, and Google, all at least of today's recording. All are going to be reporting their earnings about 2 weeks from now on February 1st. So that's certainly going to be a busy day over here on the channel. Better not waste any more time. We'll give you all those dates from the earnings perspective as we move through today's show. Meta platform start of the week at 354.96 or 86. This one up 5.5%, just blasting higher. You'll see this and NVIDIA blasting higher from a technical perspective. Meta finished the week close to $375 per share. Instagram said to be cutting jobs. This will be a very common theme on today's show. You're going to see lots of job cuts. What that lets me know is the CFOs all have to report their earnings in 2 or 3 weeks. They're all getting those reports together, and this is often the time you start to see these job cuts, is right before a quarterly earnings announcement. So sometimes it makes me think that earnings might be coming up a little light, and so these companies, having to make some cuts in order to make Q2, Q3, Q4 look a little bit better. In this case, probably not with Meta. It's just more of kind of the year or a couple of years of efficiency that the company is operating on. Meta expected to report strong Q4 after a absolute stunning reversal of fortune. This company was on its heels as it related to TikTok, its investment into the metaverse, which certainly hasn't panned out, at least as of yet. But those strong ad sales absolutely have come back. Moving on to Apple. So the weekend, 182.88. This one up just 1.6% to finish the week, close to $186 per share. The company unveiled its Vision Pro launch date here in the United States. So on February 2nd, just a couple of weeks from now, you're going to be able to get your hands on this device, which cost before tax about $3,500 to get 256 gigabytes worth of memory. You're going to be able to get readers, whatever that might be, for another $100 if you need prescription lenses. That can be had for another $149. Could you imagine paying $4,000 for a device, having to add even more upgrades to it? From an investment perspective, the analysts have chimed in and saying that the Vision Pro will likely sell out, and if it doesn't, the stock could plummet. I think this is kind of an over-exaggeration on two ways. I absolutely expect the Vision Pro to sell out, but it'll be more of kind of a marketing thing. You see this all the time. Early models, quote, sell out, or they're hard to get, maybe like a Tesla Cybertruck or something like that, to maintain the buzz, to get these in the right hands and the right people, to maintain maybe even a resale value. If you're able to get your hands on these, maybe you're going to be able to resell them for $6,000, $7,000, $8,000, $9,000. Overall, though, you have to have sustained demand for a product, again, that cost over $4,000 in what I consider to be a rather difficult economy to sell that price point of an item. Now, Apple's Chinese iPhone sales continue to drop about 30% in the first few weeks of 2024. This is what's going to make Apple stock make or break this year, are iPhone sales, and we're seeing early checks showing that Android and Huawei devices managed to stay flat year over year, but iPhone sales were actually down 30%, and this is in the country of China, which is one of the larger growth areas for the company. Among that news, Microsoft passes Apple as the most valuable public company. We predicted that several weeks ago, and maybe my bold prediction, which some people don't think is that bold. Hello, Amazon passing Apple in market cap this year would be a $1 trillion shift in market cap. If you don't think that's a big call, maybe you can send me a couple $100 million, since $1 trillion in market cap switch would be massive. Now, U.S. Appeals Court affirms a tribunal decision favoring Massimo, which has won several court challenges against the Apple patent infringement on the iWatch. The court took in some of Apple's remaining arguments and said they did not find them persuasive. I think Apple's backed up into a corner here. They're going to have to do something. I think they mismanaged this relationship with Massimo. This was a company they could have licensed this technology. This is certainly a company they could have bought just outright for their own purchases. Instead, they played some dirty tricks, and now that is coming back to bite them. Global PC shipments fell 2.7% in the holiday quarter. A recovery is expected in 2024. I think we thought that in 2023 to a certain degree. We'll certainly see if there is a shipment recovery in 2024. Don't necessarily think Apple will be the main beneficiary of that. You'll probably have Intel, AMD in particular, maybe Dell, Microsoft also would benefit from a PC recovery. Moving on to Amazon, started the week at 147.21. This stock up 5% to finish the week at 154.62. Amazon goes big on AI, new Fire TVs, and more at CES 2024. Now, unfortunately, I made it into Amazon's booth at CES as it relates to automobile tech, but their other booth was in the Venetian. I had walked by it, and I had plans to kind of retrace my steps and go back in the booth. I just never made it back. But broadly, what we're talking about with Amazon is I think they're doing some interesting stuff. On the car side, they're partnering with BMW. On the TV side, they're partnering with Panasonic. On the AI side, they're partnering with Siemens. So I like how Amazon, instead of this closed walled garden that you see with Apple and maybe some other companies out there, Amazon's actually broadening out and stretching out. I like that strategy. I think in the coming years, it will pay off from a revenue profit perspective. Now, the company is also analyzing their upcoming earnings, which again, February 1st for Apple, February 1st for Amazon, at least at today's recording. Twitch set to cut about 35% of its workforce. That would be about 500 workers. This is after in March, the company laid off about 400 employees. I mean, how many people are left over at Twitch? It's amazing that that app is relatively popular, but clearly it probably doesn't move the needle enough over at Amazon from a revenue or profit perspective. My guess is streaming platforms, maybe like here on YouTube, probably have a chance to maybe dominate that market, as Twitch certainly maybe seems like it's floundering a little bit. Now, Amazon set to lay off hundreds of media employees. Talked about how this was a trend as these companies move into their earnings dates. They've already got the numbers on the desk and they start making decisions to make upcoming quarters look even better. Hundreds of media people in Prime Video and the MGM Studios divisions of Amazon getting laid off. Look, I don't want to see anybody lose their job. Feel sorry for these people. Hope they can bounce back and find a new job and maybe a better opportunity at some point. But from an investor perspective, this is exactly what you want to see. You want to see trimming of fat and massive profits. That would drive Amazon shares much, much higher. Also, more job cuts at Audible as it lays off 5% of its workforce. If last year was the year of efficiency for Meta, I think this year is going to be the year of operating profits for Amazon. So when you look at the forward price to earnings, again, this is projected earnings over the next 12 months, the company is trading at 57 times. Certainly not cheap, but not wildly expensive compared to where the stock has traded before. I believe these price to earnings are probably underestimating Amazon's potential. So very much like NVIDIA, maybe other stocks that we've looked at, this 57 forward times earnings is quite deceptive. If these layoffs combined by stronger revenues and profits by Amazon actually could drive this price to earnings down into the 30s, maybe even the 20s, that gives you multiple expansion. And that is why I said Amazon, while I still think it's kind of an outside chance, I think Amazon could actually surpass Apple in market cap this year, considering they have over $600 billion worth of revenue that's likely to come in. And if you squeeze more profit than anticipated off $600 billion worth of revenue, well, yeah, investors will pay up for that. Now, iRobot plunged to session lows amid reports Amazon won't offer remedies in Europe. iRobot is the vacuum maker that Amazon agreed to purchase maybe about a year ago for about $1.4 billion. Amazon taking kind of a take it or a leave it approach with this. At CES, there were dozens of competitors in the vacuum / mop, or sometimes they were combined into one device. Amazon, as I've contended from the beginning, is not buying iRobot to clean your floors. It's their large patent portfolio that will help in other areas of the company, including their warehouse technology. Amazon's just walk out technology, found in Amazon Go stores in particular, where you walk in, you scan yourself in with an app, and then you grab items off the shelf and you simply walk out without having to pay at a cashier. They're bringing that convenience to hospital employees. It's kind of interesting. There'll be a hospital in Savannah, Georgia, where nurses and doctors can walk in with their badge, which you're required to wear if you work in a hospital, can walk into cafeteria or the convenience store located on the hospital premises and just simply walk out, and it will attach to either a mobile wallet or maybe even a payroll deduction as well. If that's pre-tax, that might not be that bad of a deal. Currently, Just Walk Out technology is at 120 third-party locations. That surprised me in kind of a good way. I was very bullish on this Just Walk Out technology. Amazon shuttering a lot of its Amazon Go stores, but this technology remains intact at stadium, college campuses, and airports as well. I think it has a lot of potential from a licensing perspective. Moving on to Netflix, start of the week at 476.09. This one doing pretty well, up 3.3%. Netflix is the first of these major FAANG stocks to report. They'll report about 10 days from now on January 23rd. The company's ad-based subscribers is fueling revenue growth. Now, we suspected this when this was announced. It's like, okay, if advertisers like Google or Apple or Amazon are paying you $100,000 a spot or whatever it is to run some ads, that certainly will boost your revenue. Certainly haven't seen it from a forward estimate perspective, but maybe about a year has lapped on this, and maybe now's the time we really see that revenue growth. Now, moving on probably to the stock of the week. NVIDIA started the week at 503.08. Bombastic, up 8.74% to finish the week over $547, breaking a key. You want to stick around for that technical level. Broke through a key technical level at $500, which had really been in place for most of last year. NVIDIA reports their earnings last, a little over a month from now, on February 21st. NVIDIA reached a 1 billion chip mark for orders into India. This is showing you twofold. Obviously, India is on fire. Mumbai Yoda Data Services ordered 16,000 of NVIDIA's GPUs worth about $500 million. This follows the exact same order last year. So it's showing you two things. Number one, India's obviously continuing to invest. There's plenty of money in there, or there is enough money from an investment standpoint in that country, and there's companies there making those investments. But what does it also show us? That a company with clearly a lot of money to invest ordered 16,000 GPUs last year, and they came back and ordered it again. So NVIDIA stock, that, in my opinion, is the reason why you had to shoot through the all-time highs, is because if this company from India is doing this, you better believe there's a truckload of other companies around the world going to do it as well. Now, important region for NVIDIA is China, as they are going to be in mass production on their China-focused AI chip. They've obviously had to more or less work with the United States government to find a chip that won't violate sanctions. NVIDIA's kind of sidestepped the rules a few different times, only to have the United States government come in and kind of backslap them on their efforts. My guess is this device, set to ship in the second quarter of 2024, will be the one to dominate the sales in China. Moving on to Google in its normal rotation here on the program. Start of the week at 136.90, up over 4%. This one looking great. Technically, now $142.65. Google and Yahoo's email changes could cause a minor impact, but uncertainty remains. Certainly, if you are an email marketing firm, you're a little concerned, as if you send out more than 5,000 messages per day, you have to meet some certain requirements, including one-click unsubscribe, also some spam stuff. Companies like Google and Yahoo, but also from the marketing side, you've got companies like Adobe and Intuit, which owns MailChimp. They'll certainly have to work around these changes, although most already have things in place there. Google to lay off hundreds in their voice assistant and hardware teams. Google reporting their earnings just like the rest of these companies on February 1st. They're taking a look at the numbers and they're saying, how can we make these better? Well, let's lay off some employees. Google is seeing a multi-billion-dollar U.S. patent suit related to AI technology. So you have this company called Singular Computing. It was founded by a dude in Massachusetts. He is saying that Google's AI features in Google Search, Gmail, Google Translate, and other Google services violate or copy technology that he used and developed at Singular Computing. He's requested up to $7 billion in monetary damages, which would represent more than double the largest ever patent infringement award in U.S. history. $7 billion would be a drop in the bucket for Google, but again, it would be more than double anything awarded for a patent infringement. My guess is this is a money grab, but we'll see where things go there. Don't blame anybody trying to grab money from a company like Google. Moving on to Microsoft. Start of the week at 370. Boom, up nearly 5%. Finished the week at 388.47. Absolutely on fire over at Microsoft as the company's division of OpenAI blasted the New York Times, saying that the media firm is not telling the full story as it relates to OpenAI potentially using the New York Times articles to train its chatbots. Still some conflict between training material and the companies. I'm sure a lot of that will get hashed out over the course of this year. Microsoft investment in OpenAI could potentially face an EU merger probe. I hate this. Absolutely hate story. And I know some of you guys like big government, big regulation, and you gotta have these elected officials who probably don't even know what a chatbot is or a large language model is. You gotta have them regulating this stuff. No, you don't. And here's the problem is Microsoft makes a really early and big bet and an absolute accurate bet on OpenAI. And then a year after the fact, regulators want to then probe and prod and maybe undo the deal. I think that's absolutely idiotic. It's not fair. It stifles innovation. It stifles companies coming together. Microsoft backing OpenAI helped accelerate the artificial intelligence industry because the vast majority of that is for server credits, which OpenAI would not have been able to afford on its own. Moving on to Tesla, start of the week at 236. This stock got blasted, down 7.4% to finish the week at 218.89. What is going on at Tesla as they're shuttering their German factory as Red Sea conflicts, hijackings, if you will, have disrupted the supply chain. So you got these rebels in the Red Sea that are just causing all kinds of problems there, not only from the goods moving through there, but probably from an insurance perspective as well. Tesla not able to get the goods it needs, so it's one of its largest factories had to go idle. That's not good from a revenue perspective for next quarter. Tesla reporting their earnings the day after Netflix on January 24th. Now, Tesla's hiking the pay at U.S. factories. These are all bad news, okay? So when your factory that generates revenue and profits for you has to shut down because you've got hijacking in the Red Sea, that's not good. And now your operating costs are rising as Tesla is having to hike pay at U.S. factories, likely because of some of the unionization efforts and some of the pay increases at some of the major automobile makers. Electric vehicle shocker. This one was kind of a surprise. Tesla and Rivian and others fell after Hertz hits the gas pedal. About a year ago, Hertz said that they were going to buy about 100,000 Teslas, move them into their fleet. But it appears an about face, Hertz unloading many of their electric vehicles, as what they have found is the repair cost to repair these electric vehicles is so high that it doesn't get offset from a rental perspective. They also said that if they didn't have these EVs in their fleet, instead just having regular gas cars, that their margins and profits actually would have been higher. So these electric vehicle companies are not going to be able to rely on these rental companies building up large fleets, probably anytime soon. Tesla launching upgraded Model 3 in North America at unchanged prices. My guess, just based on the design and what we're seeing and what we know about Tesla, are these upgraded Model 3s. They can be sold at the same price. They probably contain slightly higher margins. I don't think they're going to redesign a vehicle at Tesla and make it more expensive to manufacture. In fact, probably the opposite. The price is lower for them to manufacture so they can still sell it at the same price. Tesla reduced their driving ranges as the EPA strengthened its testing rules. Your long-range Model Y at full capacity was being sold with 330 miles of range, has been marked down to 310 miles per range. Those of you that don't have an EV or have never driven one, the absolutely most overrated feature with an EV is the range it gets. You almost never, ever need that much range. Moving over to the technical segment of the show, and we thought we might have a little reversal with the S&P 500, but it was a quick one. Back up here, retesting the highs. Still expect as we move through earnings season, could make our way down to the middle of this channel. All the way down would be a fantastic buying opportunity. Whether or not that materializes, we'll monitor it. I thought probably the least likely scenario is you just power up higher here and you put up like a green candle up over the all-time highs. But right now, as we move into earnings season, I guess that certainly is possible, considering these companies all look healthy from that sense. Meta's looking absolutely, oh my gosh, fantastic. Look at that secondary uptrend. You're already in a breakneck uptrend. It flattened out a little bit. Now you're steepening it out again, retesting these highs at 390. This company, again, reports their earnings just a couple of weeks from now. But I think you probably set up at the top. That's a dangerous place as you go into earnings. Rejections there could be hard, but should be bought. A move higher on earnings for Meta post earnings, I wouldn't buy. I would wait for the pullback back test. We've seen that with Apple, Microsoft, many other stocks as well. Moved on to Apple, pulled down to an area just short of where you probably could have bought it. Down here at about 180, still making higher highs, still making higher lows. It is in an uptrend. Moving on to Amazon, this one also higher highs, higher lows. It's actually still kind of in its very steep uptrend that it's been in since December of 2022. This company reports their earnings just a couple of weeks from now. You would be looking probably for a push up into the 170s. A push up into the 170s wouldn't be bought, but any subsequent pullback probably should be. Moving on to Netflix, looking like Meta a little bit, was in a breakneck trend, broke that trend, is flattened out, but is now just continuing to push higher. As this company just 10 days away from earnings, looking absolutely fantastic. Pullbacks in Netflix south of, we'll call it 440, should likely be bought based on that technical pattern. NVIDIA finally, it has not been able to get above 500 really since July of last year. It retested it numerous times over the year, just could not get over 500. Finally did. The story with NVIDIA has been the same. Any pullbacks back towards 400, even 450 should be purchased. Moving on to Google. Wow, nice. Pushed up, made another higher high. You're sitting on that steep trend now with Google. Looking absolutely sensational. The company reports their earnings again a couple of weeks from now. Pullbacks in Google south of 130 will say it should be bought. Microsoft is still in its steep uptrend that it started back in November, December of 2022, pushing again to new highs this week. Nothing seems to be stopping that from a technical perspective or a fundamental perspective. Now, the stock in the most unique technical pattern is Tesla. Micro trend down, lower highs, lower lows. Looks like to me, you break this level right here at 318, you're going to make a new low south of 195. Boy, the Tesla fanboys and the Tesla bulls will be absolutely crying on Twitter. They'll be blaming Elon Musk. They'll be saying they should be doing this, that, and the other thing at Tesla. That area should be bought. You start here right about 165. I mean, if you wanted 10 shares of Tesla, I wouldn't buy all 10 right here. That's the first area where you buy. Complicating the situation is the fact that Tesla reports their earnings 11 days from now on January 24th. Certainly will be an interesting day for the company. Can they reverse this trend and get it to move higher here? A push higher for Tesla really, really also should be bought. From a technical perspective, you'll have broken out from this trend. You were chasing the all-time highs up here at 395. You could have a move from about 300 to 395 very quickly. I'm not exactly sure what the catalyst is in the short term, but certainly an earnings conference call, while it hasn't materialized in the past, certainly could be one of those things. Folks, that was FAANG Stock Recap Show for January 12th/January 13th. Hopefully you all have a wonderful and safe weekend. I'll be back next week. Until then, good luck with your investments.